Look at this. A sea of numbers dancing across screens in a high-rise. Billions ticking upward every second. At the same time, deep underground in a data center, servers are humming, processing tens of thousands of messages per second. Trillions of dollars are flowing invisibly, yet no single camera can capture the full motion of that tide. How does value, the lifeblood of our global economy, travel so fast and yet remain so hidden? This is the story of the hidden networks that move trillions. We'll start in the age of trade, move through the architecture of power, and arrive at a world in flux-wired, tokenized, and transformed. Centuries ago, things were different. Merchant caravans carried value in bags of coin across continents. You could see the ships sailing, see the gold being unloaded. The Medici Bank, the trading houses of Venice, the early Dutch East India Company, they all created webs of value and credit that were visible. But over time, the physical melted into the abstract. The telegraph replaced letters of credit. The fortress vault gave way to the digital ledger. Then, in 1973, a pivotal moment. The creation of SWIFT, the Society for Worldwide Interbank Financial Telecommunication. Its job was to standardize how banks talk to each other. Today, SWIFT connects over 11,000 financial institutions in more than 200 countries, exchanging millions of messages every single day. Now, SWIFT doesn't hold or move the money itself, just carries the instructions. But those instructions underpin almost every major global payment. As technology evolved with things like real-time settlement systems, the wires of finance became tighter, faster, and truly global. Value was no longer tied to a ship or a bag of gold. It was zipping across fiber optics, undersea cables, and satellite links. The architecture of global finance had shifted from visible commerce to invisible messages. So what does this architecture look like today? The major cross-border payment networks like SWIFT, America's Fedwire, and CHIPS. And Europe's Target to act as the main arteries of modern finance. Just to give you a sense of scale, the global value of cross-border payments hit about $190 trillion in 2023. By 2030, that number is projected to reach $290 trillion. Behind that staggering sum is not just the movement of goods and services, but also liquidity, credit, and a constant balancing act of risk. And now, a new layer is emerging: stablecoins, tokenized assets, and blockchain systems. These are threatening to redraw the entire map. By mid-2025, stablecoins had already processed nearly $28 trillion in transactions in just 1 year. The Bank for International Settlements, often called the central bank for central banks, is already talking about a next-generation monetary system driven by this new tech. But even as the tools change, the fundamental purpose of these hidden networks stays the same. They shift risk, transmit trust, and move value across borders, all while remaining unseen by most of us. There have been a few key turning points that got us here. The first was the 2008 global financial crisis. It exposed just how interconnected banks were and how opaque systems could trigger a systemic collapse. We could all see banks failing, but we couldn't see the trillions in hidden exposures that were causing the dominoes to fall. Regulators pushed for more transparency, but the underlying complexity of the system largely remained. Another turning point came with the rise of fintech and real-time payments. The global payments infrastructure went through a massive upgrade. According to one firm, these modern systems now handle over $21 trillion in payments every single day. This drive for faster, cheaper, 24/7 payments spurred new networks and new alliances. For example, in 2023, Visa and SWIFT announced a collaboration to make global business-to-business payments faster and more transparent. The third turning point is happening right now. It's the tokenization of assets and the rise of blockchain. We're not just talking theory anymore. Institutional-level tokenization of bonds, gold, and securities is actively happening, transforming how value is transferred. At the same time, stablecoins are offering a new way to move money that could bypass the traditional banking rails altogether. So, how do these systems actually work? At its core, any network that moves trillions is built on three pillars: messaging, settlement, and trust. The messaging layer passes the instruction, like transfer this much money from A to B. The settlement layer makes sure the value is actually exchanged and the books are balanced. And the trust layer ensures that everyone involved believes the transaction will be honored. Let's take SWIFT again. It provides the messaging, but another system handles the actual settlement. A bank sends a WIFT message, but the money moves through a chain of correspondent accounts, sometimes across multiple banks and countries. This can make the process slow and less transparent. With real-time payments and tokenized networks, the messaging and settlement are much more closely merged. Tokenization allows value to be represented digitally and transferred almost instantly. This gets rid of a lot of the friction. But this shift also introduces new risks, regulatory gaps, cybersecurity threats, and the challenge of overseeing a decentralized system. Why does any of this matter to you? Because when value can move across borders at the speed of light, power shifts. Countries with established payment systems hold a structural advantage. Corporations that adopt these new rails gain a competitive edge. The networks themselves become instruments of power and influence. Today, billions of people interact with these hidden networks without even realizing it. When you click pay on a website or send money with an app, a complex chain of banks, brokers, and messaging systems lights up behind the scenes. When a multinational corporation moves its profits, it's relying on networks built over decades. And when a country faces sanctions, it can find itself cut off from these essential financial arteries. The network becomes a geopolitical weapon. Stablecoins and digital assets are emerging as an alternative rail. Some central banks are even exploring their own digital currencies. The Bank for International Settlements warns that we're on the cusp of major structural change. These hidden networks aren't just for banks either. They're embedded in our supply chains, in commodity trading, and global trade finance. The real story is this: the power to design, control, or bypass these networks is reshaping the global balance of economic power. At first glance, a financial network might just seem like plumbing for money. But if you dig a little deeper, you find something more profound. You find networks of trust, power, and design. They decide who can participate, how fast value flows, and which doors are open or closed. As the very architecture of money is being rewired with tokenization and digital cash, the stakes have never been higher. For businesses, for nations, and for individuals, connectivity is everything. Isolation is costly. Speed is leverage. Control of the network becomes control of power in our interconnected world. The flow is invisible, but its direction determines our future. The question is no longer just how do I send money, but who builds the rails, who grants the access, and whose value gets to move the fastest. The hidden networks are moving trillions, and through them, the quiet currents of power move too. Thanks for watching. If you found this journey into the hidden world of finance interesting, don't forget to like this video and subscribe for more deep dives into the systems that shape our world. See you next time.